Hello and welcome to UK Property Accountants. Appeal has arrived, bringing not only longer days but also significant tax changes that could impact your finances. Whether you're a property owner, an investor, or a business, these updates could significantly impact your finances. In this video, we'll break down the key changes, from stamp duty and capital gains tax to the end of furnished holiday-led tax benefits, as well as the non-domicile status. Stamp duty land tax changes. If you're planning to buy property in the UK, major stamp duty land tax changes are coming from 1st April 2025. Let's break it down. For first-time buyers in the UK, the relief thresholds are reverting to the pre-2022 levels. The threshold has been reduced from £425,000 to £300,000, for which no SDOT or 0% on properties is applicable. 5% SDOT on properties from £300,001 to £500,000. Previously, this was no SDOT for properties up to £425,000 with a maximum property value of £625,000. This means that first-time buyers purchasing homes over £300,000 will pay more tax than before. Standard SDOT rates, threshold reduction. For standard residential purchases, the new rates from 1st April 2025 will be 0% SDOT on properties up to £125,000. Previously, this was £250,000. 5% SDOT on properties between £125,001 and £925,000. This was previously £250,001 to £925,000. Similarly, 10% SDOT on properties between £925,001 and £1.5 million. This remains unchanged. And finally, 12% SDOT on properties above £1.5 million. This remains unchanged as well. Non-UK residents will incur a 2% surcharge, while buyers of additional properties will have to pay an extra 5% on top of standard rates. The end of furnished holiday-led FHO tax benefits. Starting April 2025, the furnished holiday lettings tax regime will be abolished, bringing significant changes for property owners. Before 1st April 2025, FHO owners enjoyed several tax advantages, including full mortgage interest reduction from rental income, capital allowances on furniture and property improvements, access to capital gains tax reliefs like Business Asset Disposal Relief or BADR, which offered a reduced CGT rate of 10%. Key changes from 1st April 2025. These benefits will no longer apply, and FHO properties will now be taxed under the standard rental rules. Capital gains tax relief removed. No eligibility for Business Asset Disposal Relief or CGT rollover relief. Instead, FHOs will now be charged at standard rates of 18% for the basic rate taxpayers and 24% for the higher rate taxpayers. Standard property income rules. Income from holiday lets will now be taxed like any other rental income, similar to buy-to-let properties. Mortgage interest restrictions. Interest will no longer be fully deductible, instead qualifying only for a 20% tax credit. No new capital allowances. While existing claims remain valid, new capital allowances can no longer be claimed. Pension contributions impacted. FHO income will no longer count towards pension contribution limits, reducing tax efficiency. Losses treatment improved. Losses can now be offset against all property income and not just FHO profits. Non-domicile status allowed UK residents with a permanent home abroad to avoid paying UK tax on foreign income and gains, as long as the money stayed offshore. It also protected overseas assets from inheritance tax. From April 2025, domicile will no longer determine your tax status, and the UK will replace the current remittance basis of taxation with a new 4-year Foreign Income and Gains (FIG) regime. This means individuals who become UK tax resident after at least 10 years of non-UK residence will benefit from a 4-year exemption on foreign income and gains. During this period, they will not be taxed on FIG and can remit these funds to the UK without any additional charges. UK income and gains will, however, remain taxable as usual. Individuals who lose access to the remittance basis and do not qualify for a 4-year FIG regime will benefit from a 1-year transitional relief in the tax year 25-26, whereby only 50% of their foreign income will be taxable. This relief does not apply to foreign capital gains, which will remain fully taxable. Capital gains tax CGT updates. Capital gains tax rates remain unchanged for now following the previous increase in the autumn budget. The 18% rate for basic rate taxpayers and the 24% rate for higher rate taxpayers on residential property gains remain in place. After 6 April 2025, the CGT rate for disposals qualifying under the BADR and investors' relief increases from 10% to 14%. National insurance contribution changes. The government has decided not to increase NICs for working individuals, keeping the basic, higher and additional rates of income tax and employee NICs unchanged. However, in a move to boost revenue, the financial burden is shifting towards employers with the following key changes. Employer NIC rates increase, rising from 13.8% to 15%. Lower secondary threshold. Employers will start paying NIC on employees earning above £5,000, down from the previous or current £9,100. Self-employed NICs. Class 2 NICs remain at £3.5 per week. Class 3 voluntary NICs remain at £17.75 per week. These changes will have a notable impact on businesses, especially with larger payrolls increasing employer costs in the coming tax year. National minimum wage increase. On a more positive note, workers will now see an increase in the national minimum wage effective from 1st April. £12.21 per hour for those aged 21 and over, up from the previous £11.44, £10 per hour for 18 to 20-year-olds, and £7.55 per hour for under 18s and apprentices. While this provides relief for workers, businesses will need to adjust to increased payroll costs. Business tax updates. For businesses, tax rates remain largely unchanged. Corporation tax rate stays at 25% for large firms and 19% for smaller businesses with profits under £50,000. The full expense allowance, giving companies up to 25% tax relief on big investments in machinery, is now permanent. Dividend allowance kept at a measly £500 with tax rates unchanged, that is 8.75% for basic rate, 33.75% for higher rate, as well as 39.35% for additional rate taxpayers. To sum it up, property buyers and investors are facing higher tax rates, but workers are getting a pay rise. If you're planning to buy a home, rent out a property, or run a business, these changes could make a real difference to your finances. The key takeaway? Planning ahead is key to navigating these changes. At UK Property Accountants, we specialize in providing expert advice tailored to your needs. Book your free 15-minute discovery call today to see how our services can benefit you. Thank you for watching.